Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There continues to be two patterns on this daily chart. One broken, repaired, broken, repaired again, and one being breached but swiftly mended. The two patterns are, one, the recent main showrunner for this market since August last year. The dark blue December 24 to August 25 bullish Andrews pitchfork. The market now in between the dark blue lower time below, currently 11.88 and a quarter, and dark blue middle time above, currently at 13.07. The very recent move up was from a small end of July, start of August double bottom pattern, Eve and Adam type, gapping up over the dark blue lower time this past weekend, reaching both the primary and secondary targets for this pattern, and in the process forming a weekly key reversal up last week. The second, or the small actual double bottom, was actually formed as a base on the combination of the second pattern and the slowly rising long moving average, which is currently 11.50. This long moving average also instrumental along with the 61.8% absolute Fibonacci line at 11.05 and 3/4, and holding the market up through June and the rise we saw in early July. Well, this leads me to the second pattern, the early January to late June bright red bullish Andrews pitchfork. Prices here are in between the bright red lower time below, currently 11.68 and 3/4, and the bright red middle time above, currently at 13.01. The market today is testing the congestion overhead seen back in March, mid-May and late July, between roughly 12.38 and 3/4 to 12.43, with further congestion overhead between 12.52 and 3/4 to the May 24 high at 12.56 and a quarter. Now, though these two pitchforks are not directly related, we nevertheless have a crossover of times on or around the UK bank holiday on the 31st of August, so please be just aware of that we may see some volatility around this time. The next one after this, actually, the crossover is around the 22nd of September. To give you a reason to consider this, the earlier one which happened, which was on the 10th of August, and was the recent low, was the day after. The recent low was actually on the day after that, on the 11th of August. So just bear it in mind and keep your eyes open on that. Chicago soybean meal. We are down to two main patterns here. One tested and rejected and still valid, and one tested, held, but being tested once again. This is where the similarity ends, as whilst one of these patterns is the early January to mid-June bright red bullish Andrews pitchfork that has pulled higher from being tested on the downside last week, breaching the bright red lower time below, currently at 311.5, but failing to establish itself down there and pulling back upwards in between the bright red lower time below and the bright red upper time overhead, the lower time and the middle time overhead, currently at 334.90. However, as I say, the similarity between soybeans and soybean meal ends here, as the second one, and one that is being tested today, is a bearish one. It is the bright green upper time, currently at 323.70, and this one is being tested today of the early May to mid-July bearish Andrews pitchfork. Now, whilst the bright green middle time below may have been responsible for the pullback up last week, the bright green upper time has not been tested before today. And I'm not sure how strong this is on its own. There's nothing actually really close to it, bar maybe a little bit of congestion at 323.30 nearby. Further overhead, we have the congestion between the 50% Fibonacci line and the May 24 to July 25 move at 326.20 to congestion at 326.90, as well as further above the November 25 high at 333.5. However, the next major roadblocks overhead are the 61.8% absolute Fibonacci line at 336.30, then this year's high at 338.70, plus the next major high from October 24 at 351.60. Overall, the bearish pitchfork is a timely reminder of a piece, indeed a final point, with which this commentary would not be complete, and that is something I've included in my commentaries now for 168 weeks, so for well into 3 years now. It is to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duty came about at the end of 2023 and I've been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I have wondered if prices were now finally sending that shadow to oblivion. Right now, well, it doesn't look so. So please don't hold your breath, as we are still, with all these moves, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was been thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today still running along just beneath the bright pink middle time, currently at 70.44. There was also a more recent pattern, a dark blue start of February to late June bullish shift pitchfork. 3 weeks ago, prices pressed down through the dark blue lower time, currently at 70.75, becoming lodged in amongst some congestion between the July 2008 high at 67.14 up to the July 23 high at 69.12. And they stayed below it, stabilizing below both the bright pink middle time and perhaps more importantly below the dark blue lower time, even as both the bright pink middle time and the dark blue lower time both rose gently higher. However, 2 weeks ago, I introduced a new pattern which, as I said at the time, and I quote, "may or may not help." End of quote. It is the start of June to mid-July bright green bearish Andrews pitchfork. This initially looked useful, as the market had at the start of August seemingly bounced up off the bright green middle time, currently at 63.37. Though in retrospect, this could also have been a bounce up off the August 23 high at 67.14. The move back up is enough that I am considering finessing this bright green bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move, or even retiring completely, as we are today, testing as we have all this week, the bright green upper time, currently at 70.32. And to be honest, this upper time does not look secure. This brings me to the point I've been making here now for a few months, when I said, and I quote, "I think for this market, the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 13th week, and the bullish incentive for the first time is still dampened, and I continue to wonder if there is an existential threat developing here. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.